Hi guys, and welcome to part 2 of 4 of the total crypto investment strategy. Now what this lesson is going to cover is a strategy called dollar cost averaging. The main purpose of this strategy is to essentially average in your buys and your sells instead of doing one huge bulk buy at this price and then this price here and then having only 2 or 3 purchases and then the market crashes and you're instantly in a negative. A great strategy that is also favoured by the famous investor Warren Buffett. Warren Buffett, in combination with the patience, the tortoise strategy that I mentioned, combines this by averaging in his purchases. This not only substantially reduces your risk over the long term, but it helps you buy in at key levels of the market. We're not trying to time highs and lows, we just keep buying regardless, whether that's on a weekly basis, a monthly basis, or a daily basis. The point is your purchases and your buys are being averaged, and you can actually see that here on my Kraken. I've done this myself, and I've been abiding by these principles for a very long time. And what you can see here is the greens are the buys and the reds are the sells. And I will show you all about this platform in a further chapter, but for now, let's have a look at my purchases. We have green here, 336 euros, as you can see just up there. With 170 euros, we have a sale for 124. I then go on a buying spree, just small amounts to test. I'm buying and I'm swapping between cryptos. I do a 700 euro buy. I do a 72 euro buy. Price spikes. Instead of panicking, I buy more, just 101 euros. I then sell 1000 euros. Again, I've made a huge profit already, guys, so this doesn't fuss me at all. I'm also swapping between the USD pair and the Euro pair, so we will go to the USD pair in a second. When the price falls, I barely sell. I make a 265 euro sell and a 172 euro sell. And notice, in comparison to what I have here and what it would have grown to, considering most of these purchases were around 40 to 83 euros. Price at this point is in the 200s, so I've already more than doubled my initial investment. Bearing in mind a lot of my original buys were done on Coinbase, so I already had the Ether in my account, and I'll show you those in my history later. So what we've got here is sales and sales and sales, but they're not really much, and you will notice I still have most of my initial investment here. At this current point in time, I was holding around 260 Ether, just on this account alone. As the price goes back up, I slowly start selling and taking some profits. Again, I have not sold all my crypto. I even buy one more time. The price continues to go up. Now you notice, after this purchase, the price begins to crumble slightly. However, we've made a new higher low. The price is now at a fairly stable level. Now in comparison, it looks like I've suffered a huge loss. But when we look at the prices I've averaged in at, if I simply had this one purchase here for say $5,000, I would have been in the negative for a long time. And whilst I would now be back in the green, I essentially covered my back, made life easier for myself, and increased not only my profits, but reduced my losses and risk for the downside. And I'd done this by averaging in here. So no matter how low price fell, I never was in a real loss. I even took some profits. And as you may remember from the previous lesson, I did say I never sell everything. I always take gradual amounts and let the rest compound over time. So I'm currently in a loss from this buy. No issue whatsoever. As we can see now, I have a 2,200 euro sell. I have a 1,220 euro sell. I took my profits off the table. What will happen now is if price was to fall again, I have euros at the ready because I withdrew profits. So should price fall, I can easily buy back in. But the point is, in another week's time, I will buy more. In another week's time, I'll buy more, depending on the crypto I'm currently looking at. But this is a long-term investment. So the way you have to look at this is, this price will essentially be absolutely nothing in 5, 6 to even 10 years time. So all of these buys here will be absolute bargains compared to where we could be in a decade's time. So if I go to the USD pair, you will see again I followed a very similar strategy. I made loads of purchases here. I even sold at the absolute peak for $1,550. I then sold another $2,532, and then I started buying more and selling, and just really gradually withdrawing profits but also making more purchases. I sold at the absolute low of the spike, but in comparison to my purchases and the growth, this means nothing. I was never in a loss. I've made loads of gradual purchases as the price was falling down. Now guys, a key element of dollar cost averaging is actually averaging in your buys as the price falls down. So when we base this from the tortoise strategy and the tortoise mindset, when the price falls, instead of panic selling, take some profits, but more importantly, keep on buying. Average your buys in slowly down. This way you're getting in at a better price every single time the market goes down. And once the market hit its peak at the bottom, I took some profits, and I also bought another $1,179 worth. At this point, people would have thought you would have been insane to buy at this price. People would have expected a crash, a melt back down to 50. Yet the market reversed. I'm now hugely in the green. Straight from this level, I sold 2,000 USD. I then bought another 500 USD, another 300 USD. I'm now break even on these trades roughly. But I then sold more. I took some profits. The point is, your buys, once they're in profit and once you've averaged over time, you will have essentially compounded so much money, none of this will matter to you anymore. You'll be broken even and you'll be safe from market crashes. If this was to break lower now, I could continuously add buys in as the price goes lower and lower and lower. So in a year's time, or even just a month's time, guys, you know how volatile crypto is. In a month's time, if this spiked from here all the way back to $400, I would be in huge profit, and so would you. I'm going to show this in an even better perspective by going to the total Bitcoin timeline. I'll add a price monitor tool, and what I'm going to show you is if you had bought at every single high Bitcoin has ever experienced, you would still be in an absolutely huge profit compared to where you bought. So we can add high after high after high. And guys, you can see what I'm getting at here. Every time the price rises, even if you bought at the all-time highs, whether that's in 2013 or 2017, you still would have been up even at the most recent high from $4,700 to $6,000. So the whole timeline here, buy after buy, from 2013, even though this would have seemed like a ridiculously high price, and in the previous video, you did see someone sell 30,000 Bitcoin for $9 million. Had they have kept this from this region, and they would have sold at this price, had they have waited in 2015 when they sold, just another 2 years, they would have had $180 million at this current price level. So what I want you to take from this lesson, and moving on to the next lesson, which will help you identify key levels to take profit and also strategize how to reinvest this in the final part of this 4-lesson strategy. So take a look at this chart, screenshot it, screenshot my Kraken, and really just take a look at my buy and sell orders. Take a look at this and see how effective compounding your money over time is. Remaining composed through all market movement will essentially pay you 20 times or even 50 to 100 times your money in the long term. This is a long-term game, guys. We are the tortoise, not the hare. See you in part 3.